Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you hear about topics that are important to the home business community. Right now, the scuttlebutt is all about these refunds, okay? In my tax professional community, a lot of us are getting phone calls, we're getting emails with people that are ticked off and saying, okay, my refund isn't like it was in previous years, or I used TurboTax and this is what TurboTax or any other software, TurboTax is just the first thing that comes to mind. There's TurboTax, Tax Act, H&R Block, whatever software. You use that software and what it came up with is not what you normally see for your tax refund, or you might be seeing a higher tax liability. So yeah, people are hot as fish grease right now. So I want to go through and tell you why there is this change, because people are saying, okay, we're supposed to have this tax cut, but I don't see this tax cut. So I'm going to share with you what happened and why you may be seeing some differences in your numbers that you're not used to seeing. Okay, so I think I have like 6 of them here. All right, so number 1, if you were one of the people that saw a little more in your check once the tax reform was enacted, then that little more was your tax refund, okay? Because each tax bracket got a tax reduction. So if you saw that little more, that was the part of your tax refund that was missing, okay? That's missing like right now. You got it throughout the year. They just didn't tell you that part, okay? So that's number 1. Number 2, high employee expenses were removed. So there are people who, like police officers, firemen, military people, there are salesmen, there are lots of different industries that had employee expenses that, that caused them to be able to itemize, okay? Well, and it's called the Form 2106. Once that 2106 was removed, there are a lot of people that felt that pain, especially people that really invest in their jobs. Like I said, I've got salesmen, I've got real estate people, it's just like I said, a different professions across the board are feeling the pinch for this. So now that you can no longer deduct that, we're talking about people who work a W-2 job from home. You can't deduct the home office expenses, the mileage. You can't deduct those things anymore. And so now that is really, like, that math is really starting to sink in now. You're seeing a reduction in your tax refund, and that was the law. That was the law that was enacted. The other thing is the removal of the personal exemptions. Now, the personal exemption prior to 2018, the last was $4,050 per person, okay? So if between your standard deduction and your exemptions, you had a big reduction in your income, those exemptions aren't there anymore. So in that instance, there are a lot of people that are seeing a higher tax bill because those exemptions are gone. So yeah, I think that's like the bonus one. Okay. The next one is the limits on the itemized deductions. You guys. Okay. So with the Tax Cuts and Jobs Act, the standard deduction was almost doubled, right? And everybody was turning backflips. Then they realized, oh my gosh, the personal exemptions are gone. Okay. That was bad enough. And then came the limitations on your state and local tax deductions. That includes property taxes. And in high property tax states, there are people that are now feeling the pinch because they're limited on what they can deduct. And so all of a sudden, where they may have had $30,000 in itemized deductions in previous years because of state and local taxes and all the other different types of itemized deductions, that's being cut down to, if you're married filing joint, $24,000. So that, again, could result in a higher tax bill, especially if you don't qualify for other types of credits. And so this is why people in those high property tax states, this is why those governments were really trying to find some way to help their taxpayers, because they knew that once the math hit, people were going to wind up with higher tax bills. Okay. So the limits on the itemized deductions. And here's the other thing I also want to share with you, because I think that people believe that everybody kind of files their taxes the same way. But let me tell you something. There's this thing called the piece limitation. See, with the piece limitations, once you reach a certain income, there are no itemized deductions. So this limitation really did not impact the super wealthy. It impacted people in what we call the middle class or the upper middle class. That's who this tax deduction really impacted, because the wealthy people weren't able to itemize anyway. So in this respect, this was no change for them, but a change for the middle class, upper middle class people, where all of a sudden at one point you were able to have these itemized deductions, and now you're not. And the wealthy people's like, okay, well, there's no change for us anyway, so we just gonna keep it moving, right? So that's why we have, in the tax community, we have said that this tax cut is going to impact the middle class and the upper middle class the most. The people that saw the benefit were the super wealthy and probably and possibly lower income people. Okay. That's how that worked out. Okay. Adjustments to the W-4. So again, with tax reform, when we had the tax reform of 86, that tax reform took a couple years to, from its conception to its implementation. This Tax Cuts and Jobs Act was done in a microwave. Okay. And so what happened is normally, in the past, when there was the change to the tax code, people would go in, everybody would redo their W-4s. Well, that did not happen with this tax cut. They just said, oh, we'll make the adjustment for you. Well, one of the problems with that is there is a certain percentage of people who now will have under withheld taxes. Now, even though there was that way cool headline that said the IRS is waiving penalties for under withholding, that was not exactly true, because you get an under withholding penalty if you have less than 90% of your current tax bill withheld. And so the IRS changed that from 90% to 85%. Yay. But that also does not apply to people married filing joint making over 150,000 or married filing separate 75,000. That penalty waiving does not apply to that segment of the population. But anyway, with this, even though you may not receive an under withholding penalty, the fact still remains that you may have had not enough taxes withheld from your paycheck. And so because you didn't have enough taxes withheld from your paycheck, then that resulted in either a higher tax liability or a lower refund. That's how that worked. And the last one, this one is what gets me, is the shift to the tax brackets. Okay, this is something that not a whole bunch of people caught and really paid attention to. All right, so with the tax bracket, every tax bracket got a tax cut. Okay, but the problem is that they shifted incomes. So even though your tax bracket may have gotten a tax cut, because of your income, you may have been shifted into a higher tax bracket and didn't know it. And so with that, because then you have been shifted into a higher tax bracket, and then you didn't change your withholdings or anything. So now you've under withheld taxes, larger tax bill, lower refund. So these are the things that are happening, and these are things like the main categories that I see people falling into with that are like, oh, this is just not right. No, the math is right. Okay, the math is right. It's just that this is the part that people didn't pay attention to. As much as, in the tax community, we tried to put the information out there to check your W-4s, to check your withholdings, to make sure you're withholding enough, to check your tax bracket. All people still went to sleep. And now they're getting a rude awakening at tax time. And there's nothing you can do. You got a lower refund or you got a higher tax bill. And so you need to look and see what happened. You need to look at your tax. I told you, look at the total tax. Everybody has a tax amount due. Okay. Even if your tax due is zero, everybody's got a tax due. You need to look at what your tax was for last year and see what it is for this year. Did you get bumped up to a higher tax bracket? And then you can make adjustments. Okay, that's the long and short of it. So you have to know what is going on in your tax life. You got to know. I can't say that any plainer. So that's what's going on. And listen, wait, let me laugh. Hold on. And listen, for my folks that chose not to use tax professionals and you chose to use tax software, that's absolutely your right. But don't come to your old tax professional and say, hey, can you check this for me for free? Because no, that is not going to happen. That is definitely unfair to that tax professional who has done a great job for you. And you just decided, okay, we're going to go I'm going to go use this tax software, and then you don't like the numbers, and then you want us to go fix it for free. No, that's not how that works. And I feel like I have to say that because there are a lot of people who are not happy with the results of their tax filing this year. And, but there's nothing we can do about that. That's just the law that was passed, and we have to keep up with that at least until 2025 is when this Tax Cuts and Jobs Act is due to expire unless they go change something. Okay? So that is it for today's episode of Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish, and you can come here and get your questions answered about your home business taxes. All right. Have a great day. We'll see you next time. Bye.